Hello crypto guys, and welcome back to Crypto Guy News YouTube channel. And today we are going to continue with the complete guide to candlestick patterns crash course part 3, and this is the reversal candlestick part 2. We did the other video, the last video we did part 1 of this reversal candlesticks. So in the last episode we learned about different types of reversal candlesticks and how to interpret them. Also in the last episode we learned the most significant reversal candlestick signals on the part 2. A reversal of the direction of a trend happens slowly after going through different stages, which we are going to continue with in this video. So we are going to start with the morning star pattern. This pattern is similar to the morning star pattern, and we learned on the previous episode that instead of that small candle here, we have a doji. As you can see, we have a doji instead of a small candle, which makes the pattern stronger and more significant. So if we have a doji over here, then the pattern becomes more significant and much more stronger. Dojis are significant than a small candle, and they show great amount of indecision. So we see that we have a long red candle that shows that bears are in command, but when the second candles of the doji forms on the chart with a gap below the body of the first candle in a start position, it shows a complete indecision, greater amount of indecision compared to a small body, and it means a complete deadlock between the bulls and the bears. So the indecision that is shown by the doji here, it means a deadlock between the bulls and the bear. It shows that the bears are losing control. The bears are the red ones are losing control, and we have increased buying pressure, but we must wait for the third candle to see who is gonna take the control, which could be the bulls or bears. Because until now, with this doji, the result is a deadlock, and we can only say that the bears are losing. If we see the red candle, this is the bear market, and this is a great indecision here. So we don't know that what follows is still the bears after they have decided, or the bulls. But in this downtrend, it may end if the third candle is red. Okay, if the third candle is red, then the downtrend might end. It means that the bears are back and took the control of the price, and the bullish signal of doji star is violated. Okay, so when this one is red, then this one, the doji here, the doji signal here has been violated. But because it's not red, that's why we have this morning star, a morning doji star. So it says that when we have a green candle, so what follows, if what follows is a green candle that closes inside the body of the red candle, it means that the bears lost the control and the bulls are taking course, and this indicates that there is a possibility that the direction of the price may change on the opposite direction. So because we have a green candlestick after the doji, which means indecision, then we see that there's a price change. But if we could have been having red here, then the doji star could have been violated. Why? Because after indecision, it will still be on a downtrend. So that is a violation of the doji. So because we have a green candle, now it shows that the indecision has ended, and now we are getting the the bull market on an uptrend. The other one that we're going to see, or we are going to look at, is the evening doji star pattern. This pattern is similar to the evening star. We have seen the evening star in the previous episode, that instead of that small candle here, we have a doji which makes the pattern stronger and more significant. So the evening star we saw in the last episode. So if you want to check the last episode, I'll link it in the description below, so you can just go and check it out and see what the evening star mean. But we are told that the evening star, we saw that the evening star is replaced by doji. That's why we have the evening doji star instead of evening star. So the only difference between the evening star and the evening doji star pattern is that in the evening doji star pattern we have a doji here, but in the evening star pattern we have a small candlestick here. Okay, so this is because dojis are more significant than a small candle and they show great amount of indecision. The long green candle shows that the bulls are in command, but when the second candle, the doji, forms on the chart with the gap above the body of the first candle in a start position, it shows a complete indecision, which means a complete deadlock between the bulls and the bears. So what makes the difference here is the doji star, because the doji star now shows the indecision between the bulls and the bears. This shows that the bulls are losing control and we have an increased selling pressure, but we must wait for the third candle to see who is going to take the control, which could be the bulls or the bears. So after these indecisions, so we are waiting for the next candlestick to see who is going to take the course here. So this uptrend may end if the third candle is green, meaning that the bulls are back and took the control. So after indecision, and then we see another green candle, we see that there is an indecision, and then the bulls took the same market, took control of the price, and the bearish signal of this doji star is violated. But when we have a red candle, so here, as we can see here, when we have this red candle that closes inside the body of the green candle, it means that the bulls have lost the control and the bears are taking course, hence a possibility that the direction of the price change on the opposite direction. Because we do have a red candlestick here, then we see that there is a price change and the potential direction is going down. But if we could have a greener candlestick, then the doji here, the meaning of the doji would have been violated. Why? Because after indecision, then the bulls went on with the price high. So there is no meaning of indecision if the price is still going high. So the doji star here is violated. That's what we're seeing here. This doji star is violated when the price still goes up. And we need, what is possible is when there is an indecision, the bulls are losing to the bears. Another one we see is the bullish abandoned baby pattern. Here the doji candle forms a star position with an offside gap. This is what we call an offside gap because the doji is far below the shadows of these candles here. So we see that the doji candle forms in a star position with an offside gap. This is the offside gap here, which means that the shadow do not touch the shadow of the doji. After this long red candle, we have a doji, but its upper shadow does not overlap. So we see that this upper shadow does not overlap the lower shadow of the first candle, and the next candle, which is a green candle, opens with an offside gap. This one also opens with an offside gap, which means that its lower shadow does not touch the upper shadow of the doji. So this line here, when we draw a line here, then this the upper part of the doji and the lower part of the bull or of the green candlestick do not touch. Does not touch. So it shows that this decline is weakening and there is a possibility of a reversal. But you should know that this pattern is very rare. Okay, so when we see this is the offset and this is another offset here, and then we have a doji, and then it's a continuation. It's a reversal of the pattern, and it's just opposite to the other ones that we'll see later on. The bearish abandoned baby pattern. In this formation, we have a doji in the middle of the two candles that is lower shadow does not touch the upper shadow of those candles. This is also what we like the bullish abandoned baby that we have discussed in the last slide, and this pattern forms in the top following an advance or near resistance. Okay, and it shows that the bulls are losing control and an uptrend is ending. This uptrend here going up is ending, and the reversal may happen, where the reversal shows that the bulls are now, the bears are now taking the market and taking the price down. This pattern rarely forms on the charts. So wherever it happens, when you see that there is a green candlestick and then a doji, after this uptrend, then a doji happens, and then we see as the first red candle, that means that is a below trend, downtrend, and this is taking the price lower than what it was before. The bullish tri-star pattern, this is the third one, this is another one, and this pattern is extremely rare but very strong and significant when it forms on the chart. So this is how it looks like. We have the red candles like the bearish market, and then we have 3 doji candles below the red candles. So the bullish tri-star forms in the bottom of a following a downtrend or a near support level, and it gives the possibility that we may have a reversal. And after the red candle, which is this ones here, the first doji can be with a gap below the red candle, body stroke closing level, and it shows the indecision among the buyers and sellers. This now the first doji, which has a gap. It can have a gap below the first red candle, and the second opens with a gap below the first doji. So this one opens below the first doji, and this doji shows that the downtrend is seriously vulnerable and we may have a reversal. And the third doji opens with a gap above the second. So this is now the gap above the second doji. And this candle shows a deadlock between the forces of bulls and bears. But here it shows that the market sentiment is changing because this candle opens in the opposite direction of the above previous doji. So we see that after this downtrend here, then we see the first one which closes below here, and then the other one closes below the previous one, and then the last one, which is the third doji, opens above the second doji, and then we have an uptrend. So the bearish tri-star pattern, this forms in the top following a near resistance level, and it gives a signal that the direction of the price may change. After green candle, the first doji forms. It can be with a gap or without a gap. So this one, first one forms, it can be with a gap or without the gap. The second doji opens with a gap above the first doji. Now this is what now we call a gap. If this last point here is above the highest point here, that's what we call a gap. And the third doji opens with a gap below the second doji. Now this one now opens with a gap below the second doji, and this shows that the market sentiment is changing. So when you see the 3 indecision doji patterns, shows that the market sentiment is slowly changing. When this pattern appears on the chart, it's a very strong significance that the signal and the price experience a sharp reversal. So as we can see here, this one was going up, and then we saw the first doji, the second one, and the third one appeared below the second doji. So there is a downtrend, a reversal, and a sharp reversal of the price. So that is the last one for the reversal candlestick. So after the part one, now this is the part two of the reversal candlestick patterns. And if you have found value in this video, please like and share. Also comment below what you want me to cover next. Do not forget to subscribe and turn on the notification bell for other valuable videos, tutorials like this. See you in the next episode.